Hello and welcome. It is the 27th day of December 2019. My name is Derek and this is the Money Charts channel, where, like always, all bets, trades, and of the like, well, that is within each's own risk and their own reward. And it's only a few days now until we close out the year and the decade and start a new one, that of the 20s and 2020. So I won't be saying 2019 anymore. It's going to be easier, I think, because often January 1st, 2nd, 3rd, 4th, 5th, you'll sometimes, at least in the business here of making videos and presenting the date, say last year's date on that sense. And soon 2019 will be last year. And the 10s, whatever we call this decade, will be last year and last decade as well. So the cool thing to do is talk about year in reviews and talk about, I guess, decade in reviews as well too. And well, predictions for the same thing, the upcoming year and the upcoming decade. Well, the decade, I guess we could start it off in here. This is the decade in reviews, pretty much. We finished off the rally, and the rally started the start of the decade. So this was the first decade of the millennium. This is the second one. So decade 1, uptrend. Decade 2, sideways consolidation. Decade 3 of the new millennium, I think, is going to be uptrend. That's my prediction. That in 3,650-ish days from now, gold will have substantially better value, not only against fiat currencies, but against probably many other asset classes as well. But most importantly, holding its value moving forward. Now, its pattern of where we look on the monthly shows this sideways consolidation, not quite within this 18 average, but that's because it has failed, and this is a bullish thing, to correct through price. Is from the high of like 1555, it managed to go down to like 1460, 50-ish, which the 18 average of highs is only up to 1430. Now price action's at 1517. Looking as if it's ready. It looks good short term. But even here, as I look at this, this is exitation of this consolidation within the 18. There was opportunities where it could have happened here. This was its first attempt. And bear markets can take a long time to heal, and most certainly you can say this was the case. Looking like it might have tried to give the attempt here, but not quite. And then after this successful consolidation, most recently, we've had all of this occur. It does look to me as if we're going to at least have a test of this high. And whenever you have key low here, have this kind of up move, and then the consolidation only come down to here, it's thus, another way of putting it, retrace a small percentile of your point A low and your point B high move. That's a significant event. So therefore, when that happens, and then it doesn't take much to get there, and when you get to that previous high, this is, I like to call this bad resistance. And I like to define it as in, if it goes down, you're probably only going to come down to where you're supposed to hold, which to me would be around here. It might do some sort of choppiness in this area. Find it as support. And maybe it just doesn't even resist it, but it doesn't even come down to 1484. Maybe it only, sort of like we're seeing now in the shorter term, it only comes down to 17. And then maybe it's not even resistance at all. And in those situations, what you're going to get, well, phenomenal breakouts. On the daily term, things are looking pretty good here. We can see that this previous level of resistance was taken out. Thus far, well, we're going to go to about right now. This previous high is where we're at now. And we're at the lower end of where we should go. This being the upper end. And that could be a decent distance, 1570, or a gain of like 55 plus. That would be close to 4% as far as gold's concerned in that term. So the objective to where it could go, it could be, well, we're already here, it could be a bit more. And if it doesn't find resistance on a fast move or concise move at this point, breaking this, well, we can see that it's been, well, a significant period of time from before, since we've been to this level, that, well, it could just be explosive, the type of gains that could come into play. But you expect that if it gets there, that we should at least have that weak resistance that I talk about, meaning we've had a good point, we have had point low, point high, we haven't retraced much more than like 38%, and then we come back to it, Oftentimes on a bullish level, if you're going to get a good price correction, probably just be back down to about here. And I also want to finish off gold by the single hour chart because I think it's a very interesting one. We can see this run it's had over the last week or so as it managed to get above this level of resistance near 1483 to 1485, and it did so on the 22nd, basically the start of the 23rd New York time. And it's been several legs of higher highs and higher lows. There's one, two, there's one, all these. And now they've settled because this is pretty much a matching high. And then the lows from the start, higher low, higher low, higher low. You get the idea. And then from this one, well, this matches this. So now we've had this, you can see this longer consolidation pattern in here. But within it, it's been a pure good time correction. And what we're seeing from this 11 o'clock hour is that it's had one pause period staying above the highs. Another one again, the previous one, so 2 in a row. Now this one has had a little bit of break into it, so maybe what we're going to see on a bullish level is this thing maybe come down, meet this low. And in a spot like that, if you can see that it does hold in this area, starts to go through, that's most certainly a bullish opportunity. But because we've already know this resistance, regardless of how the setup is, if you're waiting for a clear, concise break above, that's just what you gotta wait for. So if this thing ultimately doesn't, if it fails down, you're never going to see it probably at like 1521 or whatever number that you would be looking to get in for the next leg higher, because we've had a good move from point low to point high. At some point, we're going to have to fill some of this empty space from wherever the high happens to be. But if it breaks this resistance without doing it, we could be going up to like maybe even up to here, and we're going to talk about the empty space from this low to this high instead. And maybe we only come down to $10, $12 higher than where we are now, just as a quick example, because when you have good breakouts, that could be just that good in the sense of you could have phenomenal moves. Now this is gold, so yada yada with the percentage moves. They aren't usually too fantastic, but we are in interesting times, of course, when we show in the longer term time frames in breakout stages. And I'm going to finish off gold within the Fibonacci levels from this high to this low. As this first line represents a 38.2% correction, we can see first started to be resistance around 2016, and it was so for 3 years. And then after breaking it earlier this year, comes up to it in the summer, and we can see how it's consolidated, had a little bit of a correctionary move. So when you first got up to there, you're like, oh, we should have resistance there. And now it's at the point where like, well, should be breaking it now, and thus going to the next one. And the next one, giving it a smaller line, it deserves smaller credit. That's a 76.4% mark at 1670. That to me most certainly seems to be the next short-term, intermediate-term level on the break of this resistance. And it looks like this is just bound to take place. And thus, like I mentioned, when you break through within these levels, okay, so now we got this. Again, I'm not too enthusiastic with how great of resistance this might be, other than its short-term level. And then you get to this point up here, a previous high, 1900. And now you're talking about interesting situations with the breakouts and all that stuff. Is like, let's go to silver and then finish off with some Bitcoin. And within its decade, and that's been a decade of, well, we had this early rally, we gave it back, and this long sideways consolidation, basically for the vast majority of it. We've came up now towards the level that all these lines represent key Fibonacci from the last breakout lows. And when we take a look at this on a shorter chart, let's go to the daily chart. We've been having these lower highs and lower lows. Well, we've got above this last lower low high of 17 and a quarter. Right now up to 18, barely above it. It's high. We're still below the high in here. Now it's important that the hold must come into play. Big resistance here, 17. That to me is the obvious spot, which of course coincides with the pierce below 1740, which would be in around 1720. Which is previous resistance If there's going to be any type of support there, that's exactly what you need. Or else this rally that we've had, December 23rd, the Christmas rally of now, would be a failed one. So the Christmas rally is either going to be a breakout to a new move. And this year is really telling me within the precious metals that it's confirmation, the best that I can put it for. And I guess confirmation is another way of using a very high probability for a breakout to occur soon. Basically, see how it goes, but it's looking as if that is what is in store. Right now, I haven't got that confirmation on the crypto side. Before we get to there, I want to show the gold to silver ratio, though, which has all these lines. Key Fibonacci line of 32.50 in here, and just a whole bunch of choppy stuff action in here. So the monthly, this is pretty much the end of this month. Number 5 of staying within this upward trend correctionary phase. It will pass on a bullish level if it's able to get above this 89 mark and have continued momentum above further. It will fail, falling below at this stage below 82, and then continuation decline thereafter that. But until then, it's still in the sideways mode. And while we're looking at this just the last little bit, let's move on to the daily chart. And in this, we can see that from this high here, half a year ago in July, 8 straight days down. Thus, when you have a move that big, you're expecting a lower high to this one. Most certainly was the case. And then when you only have this bit of a rally, barely getting above the 18, and then you fall below it, you don't like the chances of a matching or higher low, nor did it have it. Nor did it have really any support on the daily. And then a major wash lower, a huge move lower. Now you're most certainly not expecting to have a higher high to this one, albeit it's been close and it still might do it. For it to happen so far, there has been 1, 2, then there was this one here, 3, or this one as the higher lows from this point. For this is the 3rd time it has fallen below the 18 average of lows since it has started to recover. The first one being September, and then again at the end of October, and now again around Christmas. And each time this has happened, it has had a recovery, but has really been unable to get any type of great rallies together, but holding it very well. However, being that this is in this type of not so doing so much choppy action, until you see any type of clear breaks, it's just all, there's nothing too exciting going on. At any given time, we could have this. So we could have a fall that just breaks through this, have days where this falls like 4% or 5% in a day. And that would be because most likely silver would go up and all that type of stuff. But the rally that has occurred has been silver doing a little bit better on the short run. Still, because of the decent size move, I suppose, I'd be a little bit, I'm expecting that it would now have a decent size move down towards the 80, which is a differential of 5 points down compared to say 90 there's a better chance that has that kind of a 5 basis point move down than one up. That's another way of putting it. Because I think after seeing this kind of move in here, that any type of rallies that it might have could easily come to the 18 average of highs and maybe pierce above it, but I think that's the best that it would do. And I'm spending so much time with this. I only wanted to spend about 7, 8, 9 minutes on the metals, and I spent about 14. So let's just finish off with Bitcoin relatively quickly. Start with the dominance, and we'll move on because not much is happening, but it is holding sideways. It's not cut up with the 18 in a sideways move, but still nothing too exciting. At least not, the volatility is so low. So for Bitcoin, we can look at it for the year. Well, we ended last year at around 3,700. Almost a 2x move. It still might be with just a 3%, 4% move. So prices have pretty much doubled year over year. Yet at the halfway point of the year, from maybe June 26th even, that's almost half off too. We've lost about 50% from the second half, which means at one point the price was like 4x. That's just the volatility and the nature of the cryptocurrencies. And right now we can see for movements, I had this little bit in here. And the average hourly time frame is going to show some interesting stuff. And I'm going to show that in a bit. We can also see that on this low here, which is December 18th, the low is 6,430, which is noticeably a pierce above. So if it hits as support, if this is the low, I don't know how anyone can know if these are truly going to be the lows or not. I mean, it could be, and it might be, and no one saying one is favored over the other. That's all part of trying to figure it out and have the best advantage you can. But it's still in this correctionary move. We had this failed breakout here. It hasn't failed this sideways test as of yet. But if it goes higher, this would be that very rare case that you get a pierce above and a Fibonacci hit kind of deal. Usually it's lower. It still could be if it falls below here. It's probably going to at least hit that number, but that was probably supposed to happen in December 16th, 17th, and it didn't then. Let's take a look at this next long term, then short term. And within the monthly chart, I need to see here that the move that took place this year that brought the price from one leg below the 18 average of lows after failing a bullish correctionary phase, and then failing after that a bearish correctionary phase. Thus, pretty much keeping this in a long sideways consolidation. But I need to see, now that it's had enough price movement and it's done enough things, we'll say, we've had this little breakout above it. We're in this correctionary phase right now, and I have to see if it's going to pass it or not. To me, in gold and silver, that's what I've seen throughout the years, them doing just that. But for this, it's got to start to make a move above here. When that's the case, then I'd be saying it's not going to take long. Bitcoin's going to have phenomenally much larger prices soon. But at this stage, at this point, because it's in the band, not like it's a surprise that it's there, but you've had a small move below it, small move above it. That's like the neutral choppiness, if that's where we're going. And in that, until it doesn't, we're just there, I guess. That's another way of putting it. Because in bull markets, when you have moves, they can be sudden and they can be fast. But you're looking for spots where you can see bullishness with the 18. In this example back in here, you were below the 18 lows, you got above it, you established this level of resistance, you had all of these periods in here. This was telling you that this thing was looking good. You had a little bit of slow movement in here, and then slow movement upward here, and then from this moment on, which was May of 2017 to December, phenomenal run. And that's what you would expect in the next part, when you start to have situations when you have your first step showing some strength, well, one of the earliest steps we'll call it, amongst the 18, and then a breakout stage, and then that you're stating a breakout, then the actual breakout itself. And then during that breakout, you're going to have runs like this. So but there's no confirmation yet telling me, okay, it looks like we're there, we're ready to go, because I need to see this thing successfully correct within what it's doing in this phase. So now that's finished off within short term. So another quick look again at the daily, which we had this failed breakout way back in October before Halloween, and it never even came back. It tested the 10,300 high. Even getting above 10,000 or 9,500 it didn't do. This decline in here, we've seen how this previous level of support that it had in September and October has most certainly been resistance. And like again, we're just in this little band in here, but when we take a look at this on the hourly time frame, it becomes very, very interesting. And I want to start showing it with just a few candles, and then we'll scale back in a little bit. But first thing is this in here, which occurred Boxing Day at 11 a.m. New York time, Eastern time. One full period going up 1.5%, then a couple hours of following through, but it was the 1400 hour where we hit this top, and then it just gave it all back. It did not support where we would want it to in here. Rather, it went through it, resisted it here, and then break down for a new low. But we've been able to come back to it again. But most importantly, since it first came up to it here at 8 a.m. today, It's had a few situations of finding support in here, building up a small short-term uptrend, but still just a lot of this sideways action, and these failed breakouts and breakouts and breakdowns have been relatively common. For we can see in here we had this one on December the 22nd. And this is where it gets really interesting. Because from the low here, December 18th, from that pierce above that Fibonacci line, very quick rally to this point, and it establishes support, and boy has it ever, because we've retested it since. But this is where it doesn't, this is where it looks very negative or bearish for the short run though. So we have this bullish run up here. Gets above this high. So therefore, the must-hold area, this is all that key resistance. That's a deep move to come down here. Heck, it should only come down to here. And sometimes in a bullish spot it will, if it's going to top here. So when it fails in here, okay, well, that's fine on a bullish point. I mean, as long as this succeeds and we can see it comes down in here, and then this is an unsuccessful rally attempt, and then a lot of congestion. A little bit of a failed breakdown, but now when we've had this little bit of rally after all of this to fail immediately, that's definitely less optimistic. I'm fully expecting this to be a more highly probable play, that the next significant move is a breakdown below this level of support, which in turn, compared to a move of say compared to going to 7,600. So whatever the same volatile move from here to 76 is, I think it's more likely we would have it to attest towards the downside. Now let's finish this off with Bitcoin Cash against Bitcoin, which has had a nice little move this morning, as we can see, and it originally got above it on Boxing Day 10 a.m., which was yesterday. Resisting here, and of course later on we resisted and supported, but from this play, 18 corrects successfully, corrects well again, and what a beautiful breakout this has been. So well that it's still got a long ways to go via that either price and or time for this to connect. But if I see a situation, I'm not going to do it, but you can shorten up the time frame to get more information on this type of stuff. But you know you hit this high here. You've had 2 full periods come to pass. 4 minutes left on a 60-minute one. This is a full one now as well. So 3 full periods of the sideways action. So to me, how does it handle a big move, whether it be up or down after the fact? And so far, it's handling it pretty good, to the point where it wouldn't surprise me if maybe it can extend these gains. I'm going to get a different exchange to look at the daily chart, but we can see there's only so much data here because Binance had it set for BCH, ABC, BTC, and then they just made it BCH. But we can see anyway here that after this fall that we are getting the inverted, what I used to call a Homer or a Bart Simpson head formation. Because if you look at the head, I mean, you draw it up and it's just like a bunch of this, like just a picture like that. That's how I draw it anyway. So this is the reverse formation in here. Which means, in this case, you had a big fall, you consolidated that fall sideways, and then you've just had immediate large breakout. So that's what we're seeing so far, coming up to what was now this previous level of support. And that's what you would expect on a break of this resistance. If this is all your information you had, you know it's going to be a substantial break above this. So just looking at key facts, you got Fibonacci from like here or here, whatever, that's piercing extra would makes sense to be here, and then this previous point. So now how does it handle this resistance? This is your must hold on any correctionary moves now, because this is previous resistance. We'll see how it plays. But anyway, better chart. We'll get more data. UOB, I think, has good data. And in viewing extra data points, we can see that as far as where it could come up to if it gets past here, well, we got previous resistance near about the 32 handle. That would be the next spot if we do not find resistance here, or if it settles itself out and sometime later in January or February will make a move up towards there. But we also had this big resistance here at this point in here, and even a consolidation period between the 66 handle up to the 250 handle, we'll call it. And it could have these gains at any decent point when these cryptos are ready to go. And we can see in this case, from at least starting from recent times, really much a meh move here if you want to count that. It's just part of the sideways consolidation that it's in right now. So it's got to get above this resistance to leave that. But this gain here, decent size move. This gain here was pretty fast. Not much of a move here, but still it's this one in here was fast. And when we even look further out in here, just in here going from well, the lower end, 924 up to 240. Better than double. Just this little bit here, let alone this move here. You go from the 500 handle, then you break resistance at 950, and then you rally from 950 to 3,800 kind of deal. Just making the numbers set like that sense. And then the very early days, in its first month of being alive, really a clone from Bitcoin, going from 717 to 2100. That's a 3x move from this low to this high. And it did in 3 days. And that's the whole point of what I'm trying to say, is when they're ready to go, there you go. Sometimes they'll give you amazing setup looks. And what's the best setup that you can see just with what I see here? And for me, I'm looking at this now like, wow, what a setup it was. And when it broke it, it did what it was supposed to do, which is right in here. After this down move, price came up to this high, corrected through the 18, retested it, and then all the time you had in there to state, oh wow, that looked pretty good. And there we can see the great move that it had. Now what you can do within this, if you have data from this, is I can take like a different time frame. Let's try and just try to scroll back to that event. So let's just see what time frame that was. It would have been November of 2017. And when we look at the 3 hour back then, there was a big decline in here, and there's this example of how fast these rallies can occur. So on August the 17th that year, at 9 o'clock, this price was a 673 handle. And then, that was 6 a.m. 19. And then about 2 days later, the price had went up like better than pretty much triple in about 48 hours. Just this little bit. So that's how fast it can happen. Again, it was in November when this big move that the setup looked good on the daily. Well, what did this look like around the November holiday? Well, we can see in here, okay, well, this is a resistance that I had established in here. At this point, it pierced above it. There's your higher low. Look at all, there's the testing in here. This was looking really good. And you can see after all of this succession, when it broke out, it had a good move. Shaked a few people out in here, but there's a failed breakout before it occurred. And then all of this time in here was even stating, oh my goodness, it's probably going to break out. You could have been figuring like November 8th in the nighttime, oh, it's going to happen. And then you have to wait pretty much close to maybe a day. But you can see the size of these moves that take place. But even after this, as I was scrolling back, I noticed there was a really good setup that occurred even after that. Let me just see if I can try to refine it in here. Is it this one in? Well, anyway, here's another situation of a fast move. April 16th, midnight. So you start a new day. It was the 15th, and it was like a 920 handle. And then on the 23rd at nighttime, it's at the 166. So it's pretty much doubled. Just like that. And before that happened, at that time, this is what the price looked like. Okay, this was setup was looking good, but it was looking good back in here too as well. Just can't tell that's going to happen when it goes off. And even back in here, you're like, oh, it's breaking down. Maybe I should sell. And, well, then you can't tell in here when you look at just this. Oh, where are we going to go next? Big move here or here? It would be tough to tell. And I'm spending way too much time on this video. It's a half hour long, so I'm going to end it. Thank you for tuning in. Bye-bye.